The Australian dollar hits a decade low. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of HeiseSays. I have my evening stein of coffee and I thought we'd finish the night by having a look at this article from news.com.au written by James Hall regarding the, decade low fall of the Australian dollar. Because on a global perspective, the Australian dollar is, essentially, some would say, pegged to the Chinese economy or a barometer of the Chinese economy. Now, before we go through his article, let's just jump over to one of my favorite websites, Trading Economics. And I brought up the 10-year chart here. Have a look. We just hit, on the 3rd of February it was at 65.7 cents. It's now at 0.669 US cents. And if we zoom out, let's see how far out we can go on this chart. Let's see all the data we can get here. Because you can see, look at this. When was it? 2000 when it hit really low, it was at 47 US cents. Do you remember that? Sub 50. So guys, it has not been this low for a while. The last time it was at this level was at 2008, 2009. What happened then? I wonder, for those of you who weren't watching or might be a bit too young, it was the GFC. So, judging by past performance, the Aussie dollar may have a little bit more to go. And I know some people are claiming, there was an article up on news.com with regards to it'll be beneficial for our economy because it will drive more of our exports, because we're one of the biggest exporters of the world, but we export a whole lot of natural resources and animal products. We also have a very big tourism industry and a big industry of university students. A large portion of that comes from one of our biggest export destinations, which is China. So Australia really is in bed with China. Really is. And that presents an element of risk, because if their economy is doing well, so will ours. If their economy is doing badly, recession may beckon. So let's have a look and see what James has written here on news.com. So the Australian dollar tumbles to fresh decade low as coronavirus fears stifle exports to China. Well, yes, we've seen that in previous videos, just how much of the Chinese, how many factories are shutting down, how many businesses are shutting down in China, even if just temporarily, but have a look at that. The Australian dollar fell to a fresh decade low this morning as the deadly coronavirus and its ensuing lockdown in parts of China stifles trading supply chains. The local currency relies on exporting commodities to the world's second largest economy, but last week, widespread ban on Chinese nationals traveling abroad is weighing on economic growth conditions. The dollar was worth as little as 66.6 US cents this morning, which is its lowest point since March 2009, though it has moved slightly higher after afternoon's trade. The Aussie is absorbing a lot of bad news from its number one trading partner, Westpac senior currency strategist Sean Callowell told news.com.au. There's been a very steep fall in Australia's key commodity prices since mid-January, which was the peak of our export prices. And we'll just jump back to, I'll bring up another website, guys, so we can have a look at that. And one of them, we'll go to Trading Economics here, is iron ore. And we'll just jump to commodities and we can see the fall in iron ore, which, remember, once we hit $50, the iron ore price is at $50 US, it's going to cause issues for any budget surplus hopes our government has. And apparently we're not a banana republic. So 62% is at 81.65 and iron ore is at 83. Down 13%, guys. Let's click on that there. Just look at that fall. You'll see it. It'll appear in a second. Look at that. Boom. Did anyone short that? Let us know in the comments if you did. Next round of drinks is on you. So, let's jump back here to this article. Trading with China has allowed the Australian dollar to limit dramatic losses in the face of 3 rate cuts from the Reserve Bank of Australia last year, as well as the country's slowing economy. But Mr. Callaway said there was now a lot of concern over China's demand for industrial products, as well as the impact on supply lanes and trade in general. The ripple effect is huge on the commodity side, and obviously there's a grave threat to Australia's service exports from the travel restrictions on Chinese nationals, he said. I was surprised the Aussie held up as well as it did early last week, but it's starting to see a bit more downside now. There you go. There's our governor. He's getting worried. He's getting worried. Reserve Bank Governor Philip Lowe last week softened on his approach to continue reducing the rate below its current record level of 0.75%, but the market indicates a cut in May of 50%, or 50% cut or a cut to 50% is likely and is fully priced to be reduced by August, with Mr. Cullow says will lead the Australian dollar being as weak as 65 US cents. He had forecast the dollar to fall to 66 cents by the middle of the year, but says this will need to be assessed. Well, yes, it's not looking too good, guys. It's not looking too good. And the reminder is, guys, while some people will argue it's good for our exports, it's bad for our imports. Look at everything that we import. Look at all the items that we import. It's going to up my software costs. Fortunately, they're priced in Australian dollars and they're digital assets. But it's still, what else? Other businesses that depend on imports. What about our construction industry with so many imported materials? So Aussie stocks weaker on virus fears. Australian shares were below the 7,000 point level at noon as continuing global concerns about the coronavirus outbreak caused falls in most sectors. The S&P ASX 200 was down 0.48% at 6,988.8 at noon, as mining and energy stocks weighed the benchmark index down. The broader All Ordinaries index fell 0.54% to 7,083.1. There were falls in most sectors, with only property trusts, telcos, and consumer discretionary stock marginally higher at noon. Mining heavyweights BHP Billiton, Rio Tinto, Fortescue Metals, and oil and gas giants Woodside and Santos were down amid lower oil and some commodity prices. The big four banks were also lower, but gold stocks and supermarket giants were in the green. I can't say that's too surprising, particularly with global economic concerns and just the price of gold. We'll jump here. Let's go to commodities. Gold. Well, there you go. 1,573.65 at this moment. It's doing well. And our good friend silver, 17.83. There you go. Woolworths was up 17.5 cents at $42. And I still remember when Woolies' first IPO was like $3. Remember that, guys? I was telling my parents to buy into it. And calls added 11 cents to 17.01. Horizon shares also climbed up 12.5 cents or 2.35% to $5.45 after the rail freight operator boosted its dividend by 20% following a strong half year. The US and European markets fell slightly before they closed for the week on the back of renewed concerns about the fast-spreading coronavirus, which has killed more than 900 people in mainland China. St. George Economics says a strong US payroll report offered only a brief break from virus concerns for the market. The death toll from the coronavirus now exceeds that of SARS, it said in a research note. Now, the problem we have is, even if this virus peters out and it's managed on a global scale, there is still going to be an economic hit to Australia, and our dependency on China, our significant dependency on the Chinese economy, is going to be brought to mainstream media attention, and more people are going to be made aware of it. Will it bring on a recession this year, guys? What do you think? Will our GDP growth continue to decline? It's been depressed since the GFC. Let's not even think about wages, guys. The next most important figure is going to be the unemployment rate. We'll see how the RBA responds to that. Anyway, everyone, thank you for joining me for this episode. Please like, share, and subscribe to the channel. If you're a fan and want to help support us a little bit extra, there are a few ways you can. We have Patreon, or the YouTube channel, where you can join with a small monthly donation. We have affiliate links at Amazon, eBay, and Independent Reserve. We sell our very own merch on the HeiseSays website, and you can make a direct contribution to PayPal or any other methods. Thanks for all your help, guys. Have a great day, and I will see you all in the next video. Bye for now.